a doctor, you always expect, there's a level of, I guess, trust you have with your doctor, and you certainly wouldn't most likely do surgery on yourself.
Right.
But, coming from the accounting and finance world, a lot of people you see try to do their own taxes, and a lot of times it probably costs them more money than it would have to try to, have somebody professionally prepare them. Mm-hmm. And if you look at like a doctor and a medical expenses, right now, of course, medical expenses are so high. In fact, you said that a night at Children's ran like $34,000.
Yeah, I just had a son that had surgery, and he had 2 surgeries, one in January, one in February. And, the bill came, and, ordinarily I think, well, insurance pays for it. Why should I even look? When I looked, I was shocked, not counting the insurance or the doctor's, the surgeon's fees, any of the pharmaceuticals or anything else. It was $34,000 a night. And I thought, man, is this just out of line or what? And so I had a friend who also had surgery over here on the east side, and found out his costs were pretty similar, about $24,000 a night at the hospital. And that wasn't, again, counting the surgeon or the doctor's fees or anything. I thought, wow, these healthcare costs are just getting crazy.
Yeah.
Most people I talk to think, one night stay at the hospital is like $4,000 to $6,000.
Which still, I think that's a high guess.
I agree.
I guessed 6,000 when you said that, and I'm thinking I'll guess 6 just to make just to appease the high end.
Right. Well, I think we're seeing, healthcare costs all across the country skyrocket, and increasingly in my practice, I'm having to figure out how do we somehow take advantage of it tax-wise? Can we deduct it? Are there things we can do to manage at least some of the pain associated with that?
No pun intended.
Right.
Yeah, which is interesting because at the top of the hour I was talking about you may have your financial team, mm-hmm. and in this case you're kind of taking this to another point, mm-hmm. that your mm-hmm. financial team may have some insight and some real strategy towards your medical team.
Absolutely. I often when I'm talking to business owners and stuff, it's like, what kinds of things are you incurring out of pocket? Are you paying for braces for your kids? I have a pair of glasses here. We just paid $1,500 for 3 sets of glasses for my kids. Most of that was out of pocket, even though we have a vision plan. You go on and on and on. My son got a brace after surgery for his leg, just to hold the ankle and the foot in place. Fortunately, that was covered, but in some plans it might not be. People usually have co-pays. So how do we, what do we do there? Well, when you add it all up, it starts to add up quite a bit to what we're actually paying out of pocket as opposed to what insurance is covering. Mm-hmm. And most people just take it out of their account and, don't think of it. They come to me and they say, can I deduct it? But usually by then it's a little late.
Right. So what are strategies that you help people with? Because, mm-hmm. of course, there are strategies that can help people keep, I guess, relatively their costs down.
Absolutely. So, one thing I see oftentimes is people can deduct, these out-of-pocket medical costs and insurance and so forth, except that where they're trying to deduct it is just the wrong place. So if a business owner is trying to deduct it, they're trying to deduct it oftentimes on their 1040, their personal or individual tax return, which if you do it there, first of all, if you itemize your deductions, you're going to take 10% of the costs, 10% of your adjusted gross income, and you're going to take that right off the top. So you could lose all the out-of-pocket medical costs right there. Second, you might be limited in the amount of health insurance premiums and dental insurance premiums you take. So I say get all that stuff off your individual return, and let's find a way to put it into your business tax return. Not all businesses are set up or structured the proper way to accommodate that, meaning certain entity types, you can't do it. Like, for example, an S corporation, some S corporations, if you own 2% or more in that corporation, you and your wife aren't eligible for some of these types of strategies. So we might have to, do some creative entity planning. Most importantly, is we have to set up what's called a medical expense reimbursement plan, a MERP. It has to be a written document. There's actually a tax return now for it. It's an excise tax return, and funny enough, it's due today, July 31st.
No kidding.
Yeah. And the tax is pretty nominal. It's $1 per participant, but you have to file it. So I think a lot of entities just aren't set up, or people aren't set up to deduct all the things that they can.
And so when you talk about all of these items, I mean, $1 per participant tax return, I mean, all these different things that come into play, to me, it only says over and over that there's no way you can do this on your own. I mean, if you're running a business or you're, a software programmer or whatever it may be, you're probably really good at that. Yeah. But then to try to move some of your expertise over to once a year to try to do your own taxes and do those effectively, as you said, I mean, you may just put it's interesting to me that you may just put the numbers in the wrong box on the wrong page. Nothing's changed about the way you've handled anything.
Yeah.
But now it can cost you more money. It just doesn't seem right to me that that you could have so many possibilities for your average person to make errors on their taxes, so they could be overtaxed or undertaxed or whatever it is, based on some strategies that that very few people know about.
Well, it's interesting you say that, because a week ago Saturday right before I went to camp, I got a new client. They were a referral, and they said, I absolutely have to meet with you before you leave. I said, well, I'm just slammed. Everybody wants to meet with you, obviously, before you go on vacation.
Just like that.
But out of respect for the referral and out of his need, because in his case, he needed to refinance a home, and he was, under the gun for, completing these tax returns, I had him bring it in, and he had prepared it himself. He just wanted somebody to review it. He used a very popular tax program. I think we can all figure out what that is.
Sure.
And when he came in, he not only made a few mistakes, he made some, I'll just say, massive mistakes. And he kept saying over and over, how can this be? I'm using the software. Why wouldn't the software ask me the questions? I did it this way. And I said, well, it's not so much that. It's just understanding the law, and that sometimes things can go in more than one spot. It's understanding that certain things apply and some things don't. And very quickly, we also found some mistakes in 2 prior years. So all told, when he walked out of my door, I'll just say he was getting a refund in the tens of thousands of dollars. And he was very happy to pay my fee, only because, it was a much, greater.
Of course, now you probably can't qualify for his mortgage, but that's a whole other conversation that we see, right?
Right. But I think it was just helpful for him to see that, the software is good if you know how to use it, just like a car is a useful tool, but there are certain levels of drivers. There are race car drivers that can follow somebody at, 180 miles an hour, bumper to bumper, and not have an accident. And then there are the careful, cautious drivers, and there's the student drivers.
Right.
Well, most of us who are DIYers are student drivers.
Right.
I wouldn't, even try to practice law or medicine or mortgage, but I am smart enough to say, hey, there's some good people out there that can help you.
John Miller joins me, CPA and partner with GDM Private Financial Solutions. John, what are some of the biggest, with these medical expenses and reimbursements? You talk about all the different ways to kind of do it, whether it's a business tax return or a personal tax return. What are some of the biggest mistakes that you see people making when it comes to their tax returns and maybe the refunds and medical expenses in general?
Medical expenses or just anything?
Just
well,
a
lot of times I see people who correctly think, okay, this is deductible, but maybe they put it on Schedule A, which is an itemized deduction, which sometimes there are certain things that, like a 2% reduction, 2% of AGI reduction, or in the case of medical, a 10% AGI reduction. Whereas if we can shift some of those expenses to, like, for example, tax preparation fees, if we can move some of those fees to the business, or if they have rental properties, to rental properties, that's perfectly legitimate, because some of the tax preparation is related to the business or to a rental property. Then we ought to do that. Then, because very few people get the advantage of taking, like, what's called miscellaneous itemized deductions, because there's just not enough. Okay. Let's see other things I see. I saw something recently. There's a lot available to manufacturers in this country. And there's something called the domestic production activity deduction. I see it over and over and over again. And this entity was, let's just say, doing a modified form of manufacturing. And by the way, construction companies, by definition, are considered manufacturing. So almost every construction company out there does not take advantage of this domestic production activity deduction. And all it is an extra deduction that Congress gives you.
It's for building
It's
stuff.
a made-up deduction.
It's so interesting. I mean, so how long is the tax code now?
Oh, I couldn't even tell you. You know, it occupies
forever
two
and a
very
day, right?
thick books, and it's a very small font. I don't even have the books anymore. I used to have the books right on my desk. I don't even do that anymore because we have access to the tools online through the different library services that we subscribe to. And, I kind of know where to go. So if I need to look
Sure.
up something,
Yeah,
I just go
probably
right
not
there.
thumbing through page 4,385, I would hope.
And I access the code a lot because
It's like
I
the
want to see.
Encyclopedia Britannica.
Yeah, I want to see, okay, in this circumstance, is there an exception? Is there a way around certain things? I do it a lot in the case of, like, we talked a few times back with bad debt. There's a lot of people still restructuring bad debt. Mortgages and voluntary repossessions, things like that. And so with cancellation of indebtedness, there's a lot of things that people have gotten wrong, and I've fixed them and managed to make things pretty good.
Certainly. John Miller joins me. John, so when you start looking at, how long the tax code is, and we talked a little bit about, the medical expenses and ways to do that. Did you have any other advice on the medical expenses and ways that people should really be thinking about that as it relates to taxes?
Well, I think we ought to think about them pretty broadly because, first of all, medical expenses can include long-term care insurance. It can include your health and dental insurance premiums, certainly, but also co-pays. I said braces, eyeglasses, durable medical equipment. There's even some provisions for, like, if you have to make some modifications in your home and it's prescribed by a doctor. At times, we can get that pulled in. But I think it's important to just recognize, think broad, and then ask a tax advisor whether we can do something. Then there's some other types of expenses that people incur that are very closely related to health insurance or medical costs. For example, disability insurance. And if you go to every tax consultant in the land, most of them will tell you, well, you don't want to deduct disability insurance because if you ever claim the benefit of it, you will be taxed on that benefit. Whereas if you don't deduct it and you pull a benefit at some point, it's not taxed. Well, we have a means for deducting it, and it's perfectly legitimate. It's been ruled upon by the IRS. You have to, again, structure things properly. Then we can also pull it out tax-free. But again, it has to be structured properly.
All right, one last question because we do have to go to break. So tell me the difference between this. When somebody says my accountant is conservative versus my accountant is aggressive,
Yeah.
what does that mean exactly? Because you say, well, you could put it here or here. Or, you could do this or this. So when you start getting that, and this is a very, I don't know if you know this, that people talk about accountants that way. I don't know how people, but you hear this, he's very aggressive, very conservative. What does that mean exactly? And I mean, isn't there just a way to do it and not a way to do it?
Well, I think I get a little trouble when people describe it that way because I think everybody ought to do it the same way, meaning they ought to have a sufficient level of knowledge to know how to do things in the best possible manner for the client. I believe in going right up to the line, but not going over the line for a client because then you place them at risk. Probably the best course I ever had in college was a course called, tax theory. And what it was is just what's the basis behind the laws? Like one theory is substance over form. That means nothing to anybody. But what it means is what's the substance? What's the overall substance of what they're trying to do? Not how did they structure it legally, but what's the substance of it? Well, was it really to try and evade taxes? Well, then it's bad.
Right.
And so it forces you to kind of think through what is Congress intending to do? What have the courts kind of ruled in similar areas? And how can we utilize that to our clients' best interest without placing them in jeopardy? I'm sure there are people who've said I'm too conservative. I'm sure there are people who've said I'm aggressive on both sides of the fence. I hope what most of my clients feel like is that I'm knowledgeable and that I'm educating them in the process as to why we're taking certain steps. And that usually if there's
I wasn't
an area,
saying you were aggressive or
that's
conservative.
okay.
I was just asking what it really means because,
Well, what I think
you don't
is
have to
important,
defend yourself, John.
No.
You're okay by me, buddy.
What I feel is important is to educate your clients so that they know what decisions need to be made so that they feel the right decisions being made. And if there's a risk, that they evaluate that risk rather than just me.